Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for August 29, 2019, which means the weekend's almost here. But before we get to the weekend, we have to deal with this volatility box, or this big rectangle on our charts. What is this rectangle? What does it mean? And how do we trade this into the future? We know that Friday will be considered at least a holiday trading session, so we aren't expecting a whole lot in terms of volume or even volatility. We can always be surprised, and we'll talk about that momentarily. But as we go into the Friday session and into next week, we will be framing out the market as we have done in terms of this wide rectangle, or volatility box as Don calls it. It's mainly a point of reference to note an upper resistance pivot that's going to be about 2939, which is up here. It's that yellow line, or just the price level, 2935, and the lower pivot just about 2825, or officially almost 2860 in terms of the levels to watch. This red line, according to our volume profile chart, is the point of control. It's the spot where most of the price and volume action has taken place. Quickly using our volume profile chart, we just note this upper value area extreme is the upper end of the range, and the lower extreme is here. But the two things I want to talk about are these high volume nodes, where the big distribution is largest, and that's where we are now. And another one is down at the lower area. And the other part is the pocket. Now, that helps us with the game plan. The pocket is a spot where not a lot of price and volume has taken place, which means when a price enters a pocket, it can trade quickly. And that was the underlying logic for today's game plan, which called for a high volatility, bullish short squeeze, and that resulted in a trend day all the way to the top of the range. As we plan out Friday and into next week, we're doing it within this framework that the market has been in a trading range in a tightly coiled box, or a specifically defined box, and again is about 2940 and about 2830, just about. That level is actually rising, so 2840. That's roughly 100 points in the S&P. So for Friday session, we'll draw it like this, kind of sneak in a graphic, that this is the dominant thesis, which calls for additional chop, consolidation, range, just like at each time we had the low, and that's the expected move, or logical play for Friday. But we can't predict that. We are ready, willing, and able to trade the alternate thesis, or the unexpected move, which could short squeeze the market and create another trend day, unexpected as it is, which could trigger above 2940 or 2945. If that happens, watch volume, internals, and other factors. At the moment, that would be the alternate thesis, but it certainly could happen, so be prepared for it. It's more about preparation for that alternate thesis short squeeze breakout, and then we discussed that in a video last week. And that could certainly still happen. We'll take a look at the bigger picture just in a moment. But that alternate thesis does call for a short squeezed breakout higher if the dominant thesis, or just what should happen, and that means what most traders think will happen, and therefore will position, as we are positioning, for a sell swing or at least a consolidation. That's going into Friday. Next week may bring support of bearishness. The same logic will take place in the Dow futures. There is a hidden pocket above the market, and a visual, we can see it there, pocket beneath the market. So don't so much worry about the red line, worry so much about these higher volume nodes, which indicate chop, and draw your trend lines if you would like. This is the Dow futures, and that is shy of about 264 in the Dow. And we have a little, I think the best thing to do is call it a rising trend line, but still at about 256. So also about roughly 1,000 points in the Dow mini futures. Pocket is in here, which means rapid movement to the downside. We can see examples of that from prior sessions, and maybe a short squeeze if above 2640. In our Nasdaq, we do have clearly defined boundaries, resistance, and support, and it mirrors the S&P. Only thing different is the levels. That would include about 7,700, 7,750, and the upper point 7,760, or let's just call it an even round number, 7,800. a lot of short sell orders, or cover the short sell order, stop losses, which are buy to cover, probably exist in this zone above 7,800. And if that triggers, that will be the catalyst for a trend day to the upside, or a series of even trend days on a breakout event. And again, if we don't think that can happen, take a look at this. Takes us back to Friday, which was a mega trend day to the downside. And that continued to the next session, or Thursday into Friday, with additional sell swing, and that even took us lower. So price can get moving quickly, especially when we come out of a consolidation, compression, or range, which we'll again emphasize in a moment. I think the Russell is best seen as the weakest of the four indices, and instead of a rectangle or clear box, volatility box, it's probably best done as a declining or descending parallel trend line pattern. And that is also at the point of control in a high volume node. So we do still see odds favoring consolidation or chop or a range day, or at least some take profits of the bulls into resistance, with the alternate thesis, which we should be prepared for, that could trigger above 1520. Those are the indices. How do the other markets compare within this volatility box, or this couple of weeks of consolidation? For crude oil, we see it too. So crude oil tends to track with the equity market. You are seeing similar signs of consolidation, or the chop, chop, chop. And we can label that, roughly speaking. I know we got a lot of lines here. I apologize for that, but it just gets a look at the price. Don't so much worry about the trend lines. It just helps contain structure. That's about 54 per barrel and 57. The whole thing is a high volume node, and we're getting chop, chop, chop. So again, dominant thesis down away from 57. Alternate thesis, big short squeeze. Be prepared for both outcomes. Now, crude oil and gold are different. We did have our bullish breakout, as discussed in a prior video, for gold that took us even higher. Our target was the prior swing high, and we see gold in high volume broke through resistance. It is now challenging, we'll update our charts, that support level, which is 15 and 35. So that's going to be an interesting thing to watch into tomorrow's session. If the equity markets do pull back or retrace or trade lower, you may see gold go back to the upper end of the range. If instead the equity markets surprise us with a bullish break, you'll probably see gold on a similar or opposite sell pathway to the 1500 per ounce level. Those are the main updates on what we call the intermarkets, or money flow between markets, especially focused on the S&P and the equity indices. Now let's conclude the video by highlighting this rectangle range, consolidation chop, volatility box, or whatever you want to call it. This is why I typically show an hourly chart on the right side of the video, because it shows you a little bit of a bigger perspective, shorter term, or more perspective, better perspective on the immediate price action than a daily chart might show, which is, again, consolidation. Now, what are the odds? We keep playing this range. Call it ping pong or chop zone or range, whatever you want to call it. The market is in compression or consolidation mode. But that's not going to last forever. Just like this, even wider, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, we're not sure, but the odds would favor, again, just like the end of 2018, a sell swing against resistance. We as traders must be prepared for the alternate thesis, which is the breakout. And if that happens, next week could be a non-stop bullish breakout that takes us back to the high. Precedent for that would have been mid-2018 or mid-2019, just a few months ago. So we're prepared for both outcomes. We are certainly planning for a bearish outcome. But if you are trading intraday Friday, look for some chop, chop, chop. Look for some range. But be prepared for that alternate thesis, which is that mean old short squeeze outcome. Any stock you're looking to trade would be within that context. And that includes any of our stock leaders in the S&P 1 or 500, or any other stock you're looking to trade. Just as a random update, that would include Apple, Amazon, and many other stocks for that matter. Similar downswing, similar chop, 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 range dynamic, low to high, high to low, and we'll play the breakout, or as some traders are more likely to do, or have more fun doing, is playing the back and forth between these short-term ranges. That logic plays into any stock you're looking at for the most part and what your trades are. So keep playing this chop range until we get that breakout and we get the new range expansion or the new move that some of y'all are waiting very eagerly for. As always, take care and be safe. This is Corey Rosenblum with your Theo Nightly video for August 29, 2019.